In late August, Bitcoin ran 24% in 4 days. Our indicator's dashboard during that entire move said, plan idle, not one entry. Look closely, and it's stranger than that. The raw layer never stopped talking. Structure breaks, liquidity sweeps, ladder stages, all firing straight through the rally. The managed layer just never opened a plan. If that bothers you, good. It bothered us too. So we spent a week trying to fix it. This episode is the honest record of that week. 3 different entry engines tested on the same data, and why the fix turned out to be understanding what this tool actually is. Why does a system with a 63% win rate watch a 24% rally from the sidelines? 2 suspects. Suspect 1, the entry. Our signal needs a regular divergence, price making a lower low while RSI holds. A vertical rally never prints that pattern. It climbs on higher lows, so the signal simply cannot exist there. Suspect 2, the exit. Even when we do catch the start of a move, the final target is 2R. We bank and leave while the trend keeps going. Both suspects sound guilty. So we put both on trial with our reproducible test harness as the judge. Trial 1. Keep the same entries, but let winners run. Replace the fixed target with a trailing stop that follows the highs. Result? Worse. Not slightly worse. The all-trailing version turned plus 8R into minus 7. Here's why. Our entries live at pullback ends inside trends, not at the launch pads of monster rallies. Between entry and any big move, normal 15-minute noise keeps knocking the trail out. The best single trade improved to plus 4R, but the tolls paid on all the other trades ate far more than that one winner returned. Verdict: the exit was never the real problem. Trial 2. We measured the blind spot precisely. Take the 25 biggest 3-day rallies across our 5 coins. Moves from 18 to 87%. How many had a long signal anywhere near them? 2, 8%. Then we built a different entry, a classic breakout, price closing above its 1-day channel in the direction of the 1-hour trend. Coverage jumped to 92%. 23 of the 25 rallies had a breakout entry inside them. So the rallies are visible to a different kind of entry. The question became, is that entry worth taking? And here's where trading gets humbling. We ran the breakout engine through the full test. 1,800 trades, fees included. Result, plus 0.003R per trade. Statistically, 0. Add the volume filter, negative. Add a displacement filter, more negative. The pullback continuation variant, clearly negative. Even with a trailing stop that caught individual runners of plus 8R on the exact rallies you're thinking of, Ethereum's 28% in May 2024, it's 44% in May 2025. The totals stayed underwater because false breakouts charge a toll on every attempt, and the toll exceeded the winners. We had already run a reversal-style engine through an 8-stage study earlier this month. Sweeps, necklines, retests, negative at every stage. 3 entry families, 1 verdict each. Reversal, dead. Continuation, dead. Divergence plus trend gates, the only survivor. By the way, both indicators are free, link below. So here's the honest identity of this tool, confirmed 3 ways. It is a pullback harvester. It earns its plus 8R over 2.5 years by collecting small, frequent, well-defined bounces. About 1 signal per coin per month, roughly 5 a month across a 5-coin watch list. Sometimes 11 in a hot month, sometimes 1. Quiet quarters are normal. Mid-2025 ran 3 straight months at a single signal. This is what a good month looks like. A plus 1R trade, banked and closed in 75 minutes. It does not, and by design will not, chase vertical rallies. Because on the 15-minute chart, every rule we tested for chasing them loses money after costs. An indicator that promised you those rallies on this time frame would be selling you the 2 losing engines we just buried. One last thought, because it matters for how you trade. Wanting a piece of the big rally is a legitimate goal. It's just not a 15-minute signal goal. That's what a holding strategy is for. A core position you keep, size so you can sleep, while a tool like this harvests the pullbacks around it with 1% risk per trade. Different tools, different jobs. Confusing them is how most accounts get hurt. Know what your tool is for. Ours now tells you honestly. If that honesty is what you want on your charts, both indicators, the sniper and the ladder, are free permanently. Open an exchange account through our link, finish KYC and your first deposit, and apply on the page. Link below. Subscribe for the next study.